Selamat sejahtera kepada Puan Masita. Nama saya adalah Yugendran Armugam. Nombor matriks kad saya adalah 10DAT 22F2001. Kelas saya DAT 3A.
Assalamualaikum warahmatullahi wabarakatuh. My name is Luqman Hakim. My normal metric is 10DAT22F2012. Today I would like to present about the financial management of the problem scenario.
Hi, a very good morning to Puan Varsita binti Abdullah. My name is Sri Varman son of Mundasamy. My medical number is 10 DAT 22F2002. I am from class DAT 3A. Hi, I'm Sri Varman here, and also with my group members Lukman, Hakim, and Yugindren. Today we want to explain about our company information, which is we take SS Resources Holding Berhad, which is our company. I want to explain about the core business of our company, vision and missions, and also the ratio for the 2 years, which is for 2022 and 2023, and also the comment for the 2 years for the ratio. Thank you. Let's move on.
SS Resources Holding Berhad Core Business. SS Resources Holding Berhad has over 40 years of experience in solid wooden furniture, manufacturing and export. The company specialized in manufacturing bedroom and dining room furniture and selling to the international market, including the United States and the Middle East. The company started as a small furniture factory established in 1981 and developed one step at the time into the corporation listed to the main board in list Bursa Malaysia, whose annual revenue exceed 150 ringgit million. The company overcome Asia's financial crisis and various challenges, never give up and walk finally towards success. As time went on, the company began in move towards reform. Moreover, combining decades of experience in the industry, a new generation of management and workforce from corporate structure, planning of production and marketing strategy to personal restructuring and so on. They also initiated new business routes and directions in order to keep the company growing and expanding. SS Resources Holding Berhad mission and vision. Mission: to constantly strive and excellence in production efficiency, product quality, and competitive pricing to ensure sustainability, safeguarding the interests of all stakeholders. Vision: SS Resources Holding Berhad entered the turning point of the reforming from the traditionally solid wood furnitures manufacturing and export. We gradually increased the development of diversified business. In addition, development of raw material, furniture retail outlet platform, assets management, and real estate investment and other projects are accepted to be complete in the coming year. Due to these changes, the company can continue to expand and develop through the competitive business model.
The organization chart of the board of directors in SHH Group company is the highest position is chairman, who is Dato Haji Obed bin Tawil. The next is the managing director. The managing director is Teo Chi Teng. The next is deputy managing director. Deputy managing director is Datin Teo Chan Wat. The executive director is Ken Liu Kim Kim. And another executive director is Grace Koo Ting Ting, and other executive directors, which is independent non-executive director, are Tan Chi Kiat, Wong Wen Min, Marisa Lee Sher Mei, and Stephen Law Chi Weng. The liquidity ratio of 2022 in SS Group company is, the first one is current ratio, is current asset divided by current liability, which is RM 689,21472 divided by 223,80,808 ringgit. If we divide, we will get 3.08 times. The quick ratio of SHH Group company is the formula current asset minus inventory over current liability. The inventory is RM21019416 plus 119,74978, and we will get 32994,394. So we will get the answer, which is how we will divide by the liability. First is 68921472 minus 329944394 divided by 223,80,808, and we will get 1.61 times for 2022. The liquidity ratio for 2023 is, the first one is current ratio, which is the same current asset divided by current liability, which is 5512,5395 divided by 15729,121, and we will get 3.50 times. The quick ratio, which is the same formula, which is current asset minus inventory over liability, which is current liability. The current asset is 5512,5396 and minus by the inventory, which is 146,79313, and we will divide by the liability, which is 15729,121, and we will get 2.57 times. The efficiency ratio of 2022 for the SHH Group company is the credit sale over average account receivable. The formula, the sales is 927,10039 over the account receivable. Average account receivable is 156,16825, and we will get answer is 5.94 times. The account receivable turnover days, the formula is account receivable over the credit sale times with 365 days. And the efficiency ratio of 2023 is the same account receivable turnover ratio, which is credit sales over average account receivable. The average inventory, how we calculate the average inventory is 156,16825 plus by 85,10256. We will get answer 2412,7081 ringgit. The answer is 83028,159 divided by 24127081. We will divide both and we will get 3.44 times. For the account receivable turnover days, which is account receivable divided by credit sales and times with 365 days. How we calculate is, which is account receivable is 85,10256 ringgit, and credit sales is 83028,159 ringgit, and we will divide both and times with 365 days, and the answer is 37 days. Inventory turnover ratio is the cost of goods sold divided by average inventory. The average inventory is 210,19416 ringgit plus by 11974978. We will get answer, which is 32,994,4397. And we will, how we will get the answer for the ratio is, we will divide the 7595,749,7479 divided by 32,994,394. We will get answer 2.30 times. Inventory turnover ratio for 2023 is the average inventory. How we calculate is 210,19416 ringgit plus by 11974978 ringgit. We will get 32,994,394 ringgit. How we calculate the inventory turnover ratio is 32,994,394 plus by 146,79313. We will plus both and divide by 2. We will get 238,36853 and 0.50 ringgit. And how we calculate is 66221706 divided by the answer, which is 223,836,853.50 cents. We will get the answer in times, which is 2.78 times. Inventory turnover days for 2022. The answer how we calculate is the formula inventory over cost of goods sold, and we will times with 365 days. The inventory, how we calculate the inventory is 210,19416 ringgit plus by 119,74978 ringgit, and we will get 32994,394 ringgit. The answer how we get is 32994,394 divided by 75957,479 times with 365 days, we will get 159 days. The total asset turnover, the formula for 2022 is sales over total assets. The sales of a SHH Group company is 927,10039 ringgit divided by 103,324,274 ringgit, and we will get 0.90 times. The last is the fixed asset turnover. The fixed asset turnover, the formula is sales over fixed asset. The sales of SHH Group company is 927,10039 divided by 344,02802, and we will divide both and we will get answer 262.69 times. For the inventory turnover days, which is for the 2023, is inventory over cost of goods sold, the formula, and times with 365 days. The inventory is 146,79313 ringgit divided by 66,221,706 ringgit, and we will time by 365 days, we will get 81 days. The total asset turnover for 2023 is sales divided by total asset. The sales is 83028,159 ringgit divided by 99179641, which is the total asset ringgit, and we will get in times, which is 0.84 times. The last is the fixed asset turnover. The formula for the fixed asset turnover is sales over total assets. The sales of SHH Group company for 2023 is 83028,159 divided by 44054246 ringgit. The both is ringgit, and we will get the answer 1.88 times. Average ratio in 2022 for the SHH Group company is, the first one is the debt ratio, which is the formula total liability divided by total asset times with the 100%. The total liability of the company is 291,12284 ringgit divided by the total asset, which is 1033224,274 ringgit, and we will divide both and times with 100%, we will get 28%. The leverage ratio, the second one is interest earned ratio. The formula is EBIT divided by interest. The EBIT I will calculate is 6120441 ringgit divided by 641756, and we will get 26762,197 ringgit. And how we calculate the interest earned ratio is 6762197 divided by 560728. We will get 12.06 times. The leverage ratio of 2023 is, the first one is debt ratio, the same as before, which is total liability divided by total asset, and we will times with 100%. The total liability is 214,74916 divided by 99179641. We times with 100%, we will get 22%. For the interest earned ratio, the formula is EBIT divided by interest. EBIT, how we calculate EBIT is 5066724 ringgit divided by 666532 ringgit, and we will plus both and we will get 5733256. And how we calculate the interest earned ratio, we divide both, which is 5733253, which is the answer, and divide by the interest, which is 585636, we will get 9.79 times. Thank you.
Profitability ratio. For 2022, gross profit margin, the formula sales minus cost of goods sold divided by sales times by 100%. Sales. 92710039 minus by 75957479 divide by 92710039 times by 100%, we'll get 18.07%. Operational profit margin, EBIT divided by sales times by 100%. EBIT 6120441 plus 6417556 will get net EBIT is 6762197, and based on formula we will get the operational profit margin 6762197 divided by 92710039 times by 100%, we'll get 7.29%. For 2023 profitability ratio, for the gross profit margin, sales minus, as usual, the formula sales minus cost of goods sold divided by sales times 100%. 83028159 minus 6621706 divided by 84028159 times by 100%, we'll get 20.24%. Operational profit margin, EBIT. EBIT divided by sales times by 100%. For EBIT, we can do additional for 5066724 plus by 66652 and we'll get net EBIT 5733 and based on formula 57 we can based on formula we can get operational profit margin is 5733256 divided by 83028159 times by 100%, we get 66.91%. Net profit margin for 2022, net profit divided by sales times by 100%, 5073174 divided by 92710039 times by 100%, we'll get 5.47%. For 2023 net profit margin, net profit divided by sales times by 100%, 34,92735 divided by 930,83028,159 times by 100%, we will get 4.21%. Return on asset for 2022, net profit divided by total asset times by 100%, 5073174 divided by 103324274 times by 100%, we'll get 4.91%. For 2023, return on asset, net profit divided by total asset times by 100%, 2492735 divided by 991,79641 times by 100%, we'll get 3.52%. Return on equity for 2022, net profit divided by shareholders' equity times by 100%. The net profit value 50731.731374. Shareholders' equity value 7421,1990 times by 100%, we'll get 6.84%. For 2023, for 2023, value for net profit 34,92735 divided by 77,777,043,735 times by 100%, we'll get 4.49%. Market value ratio 2022 for earning per share. Net profit divided by number of share issue 5073174 divided by 99999995000, we'll get 0.05 times. For 2023, earning per share 34,92735 divided by 999953000, we'll get 0.03 times. Price earning ratio for 2022, market price per share of common stock divided by earning per share RM1 1.26 divided by 0.05, we'll get 25 ringgit per share, 25 ringgit 20 cents per share. For 2023, 1.26 divided by 0.03, and we'll get 42 ringgit. We'll get 42 ringgit per share. Book value per share of common stock for 2022. Common stock equity divided by number of shares of common stock outstanding, 29112284 divided by 4,999,757,500 unit, will get 0.58 cents per unit. For 2023, 214,749,916 divided by 4,999,75000 unit, will get 0.43 cents per unit. For market ratio, for 2022, the formula market price per share of common stock divided by book value per share of common stock. The value for market price 1 ringgit 26 cent. For the book value 0.58 cents per unit, and we'll get 2 ringgit 70 cents per share. For 2023, same formula, 1 ringgit 26 cents divided by 0.43 per unit, we'll get 2 ringgit 93 ringgit 2 ringgit 93 cents per share.
Now I want to compare the ratio for the 2022 and 2023. The first formula I use is for compare the ratio is current ratio. The current ratio for the 2022, the ratio is 3.08 times, which is for the 2023, the ratio, the value is 3.50 times, which is mean favorable. The second is quick ratio. For 2022, the ratio is 1.61 times. For 2023, 2.57 times, which is mean favorable. The next is account receivable turnover ratio. Before 2022, the ratio is 5.94 times. For the 2023, the ratio is 3.44 times, which is unfavorable. The next is account receivable turnover days. For 2022, the 61 days. For 2023, 37 days, which is mean favorable. The next is inventory turnover ratio. For 2022, the ratio is 2.03 times. For the 2023, 2.78 times, which is mean favorable. The next is inventory turnover days. For 2022, 159 days. For the 2023, 81 days, which is mean favorable. The next is total asset turnover. For 2022, the ratio is 0.90 times. For 2023, 0.884 times, which is unfavorable. For fixed asset turnover, the ratio is for 2022, 2.69 times. For 2023, 1.88 times, which is mean unfavorable. The next is gross profit margin. For 2022, the 18.07% for 2022. For 2023, 20.24% favorable. The next is operating profit margin. For 2022, 7.29%. For 2023, 6.91%, which is mean unfavorable. The next is net profit margin. The 2022 is 5.47%. For 2023, 4.21%, which is mean unfavorable. The next is return on asset. For 2022, 4.91%. For 2023, 3.52%, which is mean unfavorable. The next is return on equity. For 2022, 6.84%. For 2023, 4.449%, which is mean unfavorable. The next is debt ratio. For 2022, 2022, the 28%. For 2023, 22%, which is mean unfavorable. For interest earned ratio, For 2022, 12.06 times. For 2023, 9.79 times. It is unfavorable. The next is earning pressure for 2022, 0.05 times. For 2023, 0.03 times, which is mean unfavorable. The next is price earning ratio for 2022, RM 25 ringgit 20 cent per share. For 2023, RM 42 per share, which is mean favorable. The next is book value per share of common stock for 2022, RM 0.58 per unit. For 2023, RM 0.43 per unit, which is mean unfavorable. The last one is market ratio for 2022, RM 2 ringgit 70 cent per share. For 2023, RM 2 ringgit 93 per share, which is means favorable. Now I want comments on our company each ratio. First, the current ratio increased from 3.08 times in 2022 to 3.50 times in 2023, indicating a favorable improvement in liquidity. The company has more assets to cover its short-term liability, which is a positive sign. The second is quick ratio, increased significantly from 1.61 times in 2022 to 2.57 times in 2023, indicating a substantial improvement in the company ability to cover immediate liability with its small liquidity asset. This is a favorable indication of short-term liquidity. The third is account receivable turnover ratio decreased from 5.94 times in 2022 to 3.44 times in 2023, indicating that the company is collecting its receivable less frequently. This suggests a deterioration in the efficiency of collecting outstanding payments from customers, which is unfavorable. The next is account receivable turnover days, decreased from 61 days in 2022 to 37 days in 2023, indicating a favorable reduction in the average number of days it takes to collect account receivable. This suggests more efficient management of receivable. The next is inward turnover ratio, increased from 2.30 times in 2022 and to 2.78 times in 2023, indicating a favorable improvement in inventory turnover efficiency. The company is selling its inventory more quickly, which is positive. The next is inventory turnover days, decreased from 159 days in 2022 to 81 days in 2023, indicating a favorable reduction in the average number of days it takes to sell inventory. This suggests more efficiency management of inventory levels. The next is total asset turnover, decreased from 0.90 times in 2022 to 0.84 times in 2023, indicating a decrease in the company efficiency in generating sales from its assets. This is unfavorable as it suggests lower productivity of assets. Fixed asset turnover decreased from 2.69 times in 2022 to 1.88 times in 2023, indicating a decrease in the efficiency of generating sales from fixed assets. This is unfavorable and may suggest underutilization of fixed assets. The next is gross profit margin, increased from 80.07% in 2022 to 220.24% in 2023, indicating a favorable increase in profitability after accounting of the cost of goods sold. This is indicating improved efficiency in production or better pricing strategies. Operating profit margin decreased from 7.29% in 2022 to 2022 to 6.91% in 2023, indicating a slight decrease in profitability from operation. This is unfavorable. It suggests reduced efficiency in controlling operation expenses. The next is net profit margin, decreased from 5.447% in 2022 to 4.21% in 2023, indicating a decrease in profitability after accounting for all expenses. This is unfavorable as it suggests reduced overall profitability. Return on asset decreased from 4.91% in 2022 to 3.52% in 2023, indicating decrease in the company ability to generate profit from its asset. This is unfavorable as it suggests lower efficiency in asset utilization. The next is return on equity, decreased from the 6.84% in 2022 to 4.49% in 2023, indicating a decrease in the company ability to generate the profit of its shareholder relative to equity. This is unfavorable if suggests lower returns or shareholder equity. Next is debt ratio, decreased from 28% in 2022 to 22% in 2023, indicating a favorable decrease in the proportion of debt in the company capital structure. This suggests improve the financial stability and reduce a risk associated with the debt. The next is interest and ratio, decreased from 12.06 times in 2022 to 9.79 times in 2003, indicating a decrease of the company ability to cover interest expenses with its earning. This is unfavorable and suggests increase the financial risk. Earning per share, a decrease from RM 0.05 cent per share in 2022 to RM 0.03 cent per share in 2023, indicating a decrease in the company profitability on a per share basis. This unfavorable for stakeholders. The next is price earning ratio, decreased from RM 25 ringgit 20 cent per share in 2022 to RM 42 per share in 2023, indicating a favorable decrease in the price investors are willing to pay a unit of earnings. This suggests that the stock may be considered more attractive to investors. The next is book value per share of common stock, decreased from RM 0.58 cent per unit in 2022, RM 0.43 cent per unit in 2023, indicating a decrease in the value of aspect per share. This is unfavorable as it suggests a decrease in shareholder equity per share. The last one is market ratio, increase from 2 RM 2 ringgit 70 cent per share in 2022 to RM 2 ringgit 93 cent per share in 2023, indicating a favorable increase in the market value per share. This suggestion increased investor confidence, may indicating a positive market sentiment towards the